Hello, this is Steve Warshaw from RecordPriceBreakout.com, and today I'm looking at a chart of the Spider Gold Trust, symbol GLD. This is an ETF that tracks the gold commodity, and as you can tell, today was yet another up day in gold. Many people had expected a bit of a pullback after we broke through all-time highs to go ahead and retest this 100 level. It hasn't happened yet. In fact, gold continues to take off, and so thought it might be somewhat useful to figure out, the reason we could have found the breakout out of this sideways this sideways trending pattern here, and as well as some targets as far as where I think gold is going. So, first of all, I wanted to take a look at, obviously, what we have here is a sideways pattern. And there were a few areas where you can see there's some obvious support that created this kind of a channel. There was some there. Obviously, this area here was the bottom. So, how do we know that this was going to break out, and how far do we think it was going to go? The first thing you want to do is I'm going to go ahead and take all of the indicators off of this screen here. And the first thing that you would want to do is just take a look at what we have happening here. And what that is a series of higher highs and higher lows coiling this part of the pattern right through here. You see this part of the pattern is coiling up right through here. And so what you would want to know as a trader is how do we know if this is going to break out to the top or the bottom? Well, there are a few things that you can take a look at right here in this particular part of the chart without any indicators. So the first one that you want to take a look at is volume. And the big thing is when you look at up days versus down days. So you see a longer green. What is the predominance of volume? So the higher high days tend to be green in this particular chart. You got this here, you got this area here, here, and here, where all of the green bars are larger than the red bars. So that's you're seeing an accumulation at that point. So let's take a look at an indicator that also can give you those kind of clues. Okay, so here's the indicators I was talking about, and what these are, this top one here in blue is called time segmented volume, and all time segmented volume is a indicator that combines time, price, and volume. And what you're looking for is a divergence between time segmented volume and a rate of change in time segmented volume, which is this indicator here. What that does is it notates accumulation by institutional investors and institutional traders. And so if we're only focusing on this part of the box, you want to find TSV rising where rate of change is falling. And interestingly enough, right through here, and let me just go ahead and draw this on the screen. Right through here, you get that nice divergence. Right as you see the price getting higher lows and higher highs. This is showing an accumulation by institutional investors, and we would expect an upside breakout. And of course, that is exactly what's happened here. So what I believe is that the market is not done going up. I believe that it's still going to go higher. And how much higher is the question. So I'm going to take all the studies back off the screen, and I'm going to go ahead and add in some Fibonacci levels. And so what you see here is I've measured from the highest high in early 2000 to the lowest low here in late 2008, and you see the Fibonacci retracement and extension levels. And we are getting right on up to the 138.2% retracement level, which is at around $113.97. Let me zoom this in a little bit. And so what am I expecting? Well, typically in the markets, the 50% or the 150% retracement level is what they call thin air. And so, if you take a look at the recovery here, you know, as it came down, 50% was support, and as it came back up, you started to see some resistance in between these levels. And so what I would expect is to see a little bit of a pause here at the 150 level, which is $118, and then maybe a correction, a small correction, something in this neighborhood of $10 to $12, and then a continued rise up to this 122.18%, or $122.18 level. And so basically what I'm expecting is, for the market to kind of, go like this, give us a little bit of a pullback, and then, come back up, back up, back up. And then once it gets here, we're going to have to take a look at the indicators again. But I believe this market isn't going down anytime soon. I would buy on any kind of corrections, and maybe start taking a look at some bull call spreads in this market. This is Steve Warshaw, the Trade Detective from RecordPriceBreakout.com, and I hope you enjoyed this video.